Hello friends, welcome back. Here is our next case study from CA Final Paper 3 Audit ICI booklet on MCQs and case-based scenarios. Case study number 6. Sarvodaya Limited is a public company engaged in the business of manufacture of tires. The company had turnover of 300 crores during the financial year 1920. Messrs. Sita, Geeta and Associates have been appointed as statutory auditors of the company for the financial year 1920. The audit firm has also been the tax auditor of the company since 2017-18 and continues to be the tax auditors for 1920. During the course of audit, Messrs. Sita, Geeta and Associates received a notice from the company regarding general meeting to be held to discuss the prospective merger and acquisition by the company. The engagement partner CA Geeta decided not to attend the meeting by herself and to send CA Rohan, another partner working with her in the firm, having COP and recently joined the firm, to attend the same as her authorized representative. Also, she understood that there is no obligation as such on them to attend such meeting, though they have a right to receive such notice. Further, the auditor came across a fraud whereby an accounts officer of Sarvodaya Limited has made unauthorized payments amounting to 80 lakhs using bogus checks. The auditor understands that as per the company's audit and auditors rules 2014, since fraud amount does not exceed 1 crore, the reporting in this regard is not to be done to the central government, and only the company is bound to disclose such fraud in the board's report. See, here we have came across two things. One is relating to the auditor's right to receive and attend, obligation to attend the meeting. Here the understanding of Ms. C.A. Sita is not correct, because auditor has both the right to receive the notice of meeting and also has an obligation to attend the meeting. However, she has sent C.A. Rohan as her representative, even that is fine. Okay. And the second one is the fraud that was identified by C.A. Sita. That 80 lakhs fraud has been made by some accounts officer, right? Yes, accounts officer has made a fraud of 80 lakhs. Since this is less than 1 crore, it is right that not to it is okay for not reporting to the central government. However, the same has to be reported to the audit committee of the company. Okay, these are the 2 points that I want you to concentrate. Hope you have understood these 2 points. We'll be moving further. Further, during the financial year 17-18, Sarvodaya Limited acquired 5 companies, out of which 2 were foreign companies. Sarvodaya Limited made consolidated financial statements including the 3 Indian companies, while the 2 foreign companies were not consolidated mistakenly. The management of the Sarvodaya Limited decided to voluntarily revise its accounts of the financial year 17-18 and subsequent year and discuss the matter with the auditor. See, here you cannot voluntarily revise the accounts. First, you need to take the approval of the tribunal, and if the tribunal is satisfied, it will pass an order to such revision, and you need to file that order of tribunal to the registrar. Only then you can revise. Okay, if you are revising your financial statements, then auditor also has a right to revise his tax audit report, but he should refer to the earlier report as well. Okay, this is the next point which I want you to concentrate. Hope you have understood my point. Here the company has to take permission from tribunal, and if the tribunal is satisfied, tribunal will issue an order, and now the company has to file this tribunal's order to the ROC, and then it should revise its consolidated financial statements. Since the company has revised its consolidated financial statements, even the auditor has right to revise his tax audit report, but he should revise such report by referring to the earlier one. Okay, we'll continue further. Also, when the statutory audit was going on, Sarvodaya Limited started the process to declare interim dividends for the financial year 1920 out of the profits of the same year. However, the company did not transfer any profits to reserves for the financial year. This is not correct as per the auditor. Further, the management of Sarvodaya Limited did not intend to transfer the amount of dividend so declared to a separate bank account, as they have declared interim dividend, and according to them, such transfer is required in case of declaration of final dividend only. Even this paragraph is consisting of 2 points. Just please be concentrated throughout this case study, okay? The first point here is transferring amount of profits to the reserves while declaring dividends. Auditor's viewpoint is you need to transfer some amount of profits to reserves and then declare the dividend. But what management is thinking, it's okay even if you have not transferred anything to the reserves. The viewpoint of the management is correct, because while declaring dividend, it is not necessary for you to transfer any amount to reserves, because transferring an amount to reserves is optional. Okay, so the viewpoint of the management is okay, correct. And the second point which I want you to concentrate is transferring the amount of dividend to a separate bank account. See, whether it is interim dividend or final dividend, you need to transfer to a separate bank account within 5 days from the date of declaration of this dividend. Okay, hope you have got these 2 points, and we are moving further. Till now we have discussed 5 points from these 2 paragraphs, sorry, from the first 3 paragraphs, right? No, from the first 2 paragraphs we have discussed 5 points. I want you to concentrate again. I am repeating these 5 points in a small point wise points. The first point is the right to receive and obligation to attend meeting for an auditor. And the second one I want you to concentrate is the fraud that was identified. And the third that one I want you to identify is the interim dividend which need to be transferred to the bank account. Fourth one is like transferring of amount to the reserves when you are declaring dividend. And the fifth one is relating to linked to the first one, that sending a representative by auditor to the to attend the meeting. Okay, so we have come extra 5 points. We'll go through the next one. Continuing further, during the course of audit, sorry, the fifth one is like there is one more point from the previous paragraphs, that revision of financial statements. Okay, okay, continuing. During the course of audit, the auditors found that the company has not made a provision for tax, even though such liability was anticipated at the time of finalizing accounts for the financial year 1920. When the auditor discussed the same with the management, they were told that since the company has declared dividend out of the current year profits, the company has not made provision for tax liability so anticipated, and the same will be duly paid at the time of return filing. During the month of August 2020, that is financial year 2021, the company had sold tires to two-wheeler manufacturer, namely Super X Limited, valuing 10 lakhs at arm's length price. MDS Bank has given guarantee to Sarvodaya Limited for Super X Limited. The branch manager of MDS Limited is Mr. Shivam, the son of Sita, C.S. Sita. This may attract disqualification of Messrs. Sita, Geeta and Associates as statutory auditors for the next financial year 2021. Just think, here bank is giving guarantee to the company. It is not relevant whether the bank manager is a relative to the statutory auditor. And hence, here the last point, which is discussing about the disqualification of Messrs. Sita, Geeta and Associates, is wrong. There is no such disqualification on Messrs. Sita, Geeta and Associates to continue as statutory auditors for financial year 2021. Because here, neither the partner, nor the auditor, nor the relatives of the auditor, or the nor the relatives of the partner is giving guarantee to the company. Here bank is giving guarantee to the company. Hope you are clear with this point. Now we'll go through the MCQ questions which were given. Based on the above facts, answer the following. Question number 6.1. Whether the understanding of CA Sita regarding their right and the duty to attend the general meeting is correct? Further, is she right in not attending the general meeting by herself and sending CA Rohan to attend the general meeting for which the former has received a notice? So the question consisting of 2 parts. The first one is regarding the understanding of CA Sita. The understanding of CA Sita is wrong. This point we have already discussed while discussing the case. Okay. The understanding of CA Sita is wrong. However, She is right in sending CA Rohan as her representative. Now we'll find out this answer from the options given below. Okay. Option A says Miss Sita is correct. Is she correct? No, she is not correct. So option A is straightforward wrong. We'll go to the next option. Miss Sita is not correct, as the auditor have the right to receive the notice of every general meeting. Also, it is their duty to attend such meetings. Further, she is not correct in sending CA Rohan to attend the meeting. The second part of the answer is wrong, because the first part of the answer is answering the first part of the question. The second part of the question is relating to sending CA Rohan as representative. CA Sita is correct in sending Rohan as representative, but here the answer is saying she is not correct. So option B is also wrong. Option C says Miss Sita is not correct, as though the auditor have the right to receive notice of every general meeting, they also have the duty to attend such meeting. Further, she is correct in sending Mr. Rohan to attend the meeting as her authorized representative. Yes, our answer is in option C. So option C is the correct option, but still we'll go through the other option. Option D says Ms. Sita is correct, as the auditor have the right to receive notice of every general meeting. However, they are not under obligation to attend such meeting. So option D is also wrong. Option C is the final answer. We'll go to the next question, question number 6.2. With respect to the fraud committed by the accounts officer, is there any other reporting requirements apart from the disclosure in the board's report? Yes, auditor has to give such information to the audit committee. Yes. Option A says Miss Sita Geeta and Associates should report the fraud to the Board of Directors and central government. No, here the fraud is less than 1 crore, and therefore we are not discussing about the central government. So wherever central government is there, we need to avoid those two options, option A and option C consisting of central government, and hence I am not going through also. Option B says Miss Sita Geeta and Associates should report the fraud to the audit committee or the board of directors within 2 days from the knowledge of fraud. Okay. And option D is also consisting of central governments. Therefore, straight away our option is option B. Our correct answer is option B. We'll go through the next question. Question number 6.3. What should CS Sita advise the management regarding the voluntary revision of financial statements relating to the financial year 17-18 and subsequent years? We have already discussed. Your advice should be, you should take an approval from tribunal, file the order of tribunal to the registrar, and then continue with revision. We'll find out this answer in the options. The management of Sarvodaya Limited can revise the financial statements after obtaining the approval of the tribunal, and the order passed by the tribunal shall be filed with the registrar. So option A is the correct option, but still we'll go through the other options. The management of Sarvodaya Limited cannot revise the financial statements. No, there is an option to revise. Option C says the management of Sarvodaya Limited can revise the financial statements after obtaining the prior approval of the Ministry of Corporate Affairs. No, Ministry of Corporate Affairs is not at all linked with this topic. Okay. We'll go through the next option. The management of Sarvodaya Limited cannot revise the financial statements of 17-18 but can revise the financial statements pertaining to 18-19. Even this is illogical. So option A is the correct option. We'll go through the next question, question number 6.4. With respect to the revision of financial statements 17-18 and subsequent year, can Messrs. Sita Geeta and Associates revise the corresponding tax audit report also for those years if the financial statements are revised? Yes, but with reference to the earlier report. We'll find out this option in the we'll find out this answer in the options given below. Messrs. Sita Geeta and Associates cannot revise the tax audit report. No, this option is straightforward wrong, because if you are revising your financial statements, the auditor also has the right to revise his tax audit report. This point we have already discussed while going through the case study. Okay. So option A, option B is saying cannot revise, and hence I'm not going through the options because the options are straightforward wrong. Option C says Messrs. Sita Geeta and Associates can revise the tax audit reports if the audit accounts are revised by the company, and they should specify the reason for such revision with the reference to the earlier report. So option C is the correct option. But still we'll go through the other option. Option D says Messrs. Sita Geeta and Associates can revise the tax audit reports at their own discretion for any purpose and for as many times as required. No, Option C is the correct option because it is not at the discretion of the auditor. Question number 6.5. Is management of Sarvodaya Limited correct in not transferring any percentage of profit to the reserves before it declares interim dividend out of current year profits of 1920? Yes, the management is correct because it is optional. Transferring an amount to the reserves is optional. We'll find out our answer from the options. Option A says the management of Sarvodaya Limited is correct in not transferring any percent of profits to reserves, as transfer to reserves is optional. So option A is the correct option. But still we'll go through other options. Option B says the management of Sarvodaya Limited is correct in not transferring any percentage of profit to reserves, as such transfer of reserves is required in case of declaration of final dividend and not the interim dividend. So it is not at all mandatory for final dividend also. So it is an optional transfer, and therefore option A seems to be correct still. Obviously option A is the only one answer that is correct. Okay, but still we'll go through the other option. Option C says the management of Sarvodaya Limited is correct in not transferring any percentage of profit to reserves, as the company has declared the dividend out of current year profits. So even this is not the correct reason for not transferring the not transferring amount to reserves. Even if you are declaring out of current year profits, previous year profits, whatever it might be, transfer to reserves is optional. The management of Sarvodaya Limited is not correct. Straight away wrong, because management is correct. So option A is the final answer. Question number 6.6. Is the contention of management correct in not transferring the amount of dividend declared to a separate bank account? No. The contention of management is not correct. It should transfer the amount to a separate bank account within 5 days. We'll go through the options. Option A says the management of Sarvodaya Limited is correct. Is the management correct? No. So option A, invalid answer. Option B is also not correct because even this option is saying that the management is correct. So option A, option B are wrong. Option C says the management of Sarvodaya Limited is not correct, as such amount is required to be transferred to a separate bank account in case of declaration of final dividend as well as interim dividend within 7 days from the date of declaration of such dividend. No, it is within 5 days. And therefore option C is also wrong. Option D says it should be transferred within 5 days from the date of commencement of from the date of declaration of such dividend, and therefore option D is the correct option. We'll go through the next question, question number 6.7. With respect to the non-provision of income tax liability by the Sarvodaya Limited, what course of action should Mr. Sita, Geeta and Associates follow in their audit report? What they will do? They will qualify their opinion. So option A says Messrs. Sita, Geeta and Associates should qualify the audit report, as such non-provision of anticipated income tax liability hampers a true and fair view of the state of affairs of the company. Option A is the correct option because it is hampering the true and fair view of the accounts. Option B says should give an unqualified opinion. No, auditor should give a qualified opinion. Therefore option C and option B, which says unqualified opinion, both these are not correct. Option D says Messrs. Sita, Geeta and Associates should qualify the audit report, as such non-provision of anticipated income tax liability leads to overstatement of current liabilities and provisions in the balance sheet. Even this is wrong. The correct reason is it is hampering the true and fair view of the results of the company, and therefore option A is the correct option and auditor should give a qualified opinion. Question number 6.8. Can Messrs. Sita, Geeta and Associates be appointed as the statutory auditors of Sarvodaya Limited for the next financial year 2021? Yes, they should. They are eligible to be appointed as an auditors. Okay, because this question has been asked with regard to that bank guarantee one, because the son of C.A. Sita is the bank manager of MDS Bank Limited, which is giving guarantee on behalf of some customer of Sarvodaya Limited, right? Yes, here it is. Branch manager of MDS Bank is Mr. Shivam, who is the son of C.A. Sita. Here, bank is giving guarantee to Sarvodaya Limited, which is the company that this Sita, Geeta and Associates are the auditors. Therefore, it is not the relative, nor the partner, nor the auditor himself is giving the guarantee, and therefore they are eligible to be appointed as a statutory auditor even for the next financial year. So we'll go through the options. Option A says yes, Sita, Geeta and associates can be appointed as statutory auditors for the next financial year. This is the correct option. Option B says no. So even we will also say no to option B because this is not the correct option. We will go through option C. Yes, it can be appointed as a statutory auditors of Sarvodaya Limited for the next financial year, but only CA Geeta can conduct such audit and CA Sita is disqualified from taking such audit assignment. Even if one partner is disqualified, entire partnership firm is disqualified from being acting as statutory auditors. Here, no single partner is disqualified from acting as an auditor. Therefore, option C is also wrong. Option D says yes, Messrs. Sita, Geeta and associates can be appointed as statutory auditors of Sarvodaya Limited for the next financial year, subject to approval of CAG. There is no such approval requirements with relating to appointment of statutory auditors, and therefore we have completed our next case study number 6. With this, we have completed 6 case studies, more 24 there. Okay. That's all for today. We have completed our case study. If you have any doubts, please comment below. I'll refer to you back in our next video. If you like these videos, please do like, share, subscribe and hit the bell icon. Please share with your friends who are in need and help them to revise the topics as soon as possible. Okay, that's all for today. Thanks for watching.